Alright traders, I'm back again with another video, and today we're going to take time and talk about a few trading opportunities and also look at a live trade that I'm in. Talk about a few other things. Right now you can see this trade, not 39 pips I'm profitable for on this New Zealand dollar yen. I entered this trade last night. Now also on my chart you can see this RSI. I have this RSI down here. Previously I talked about the Ultimate Oscillator. Well, now I'm going to show you about the RSI. The RSI I like to use a little better than the Ultimate Oscillator, not for per se for divergence, because looking for divergence, I think the ultimate oscillator is the best indicator used for divergence, but I don't enter a trade based off of divergence. I just look for an area where a support and resistance level where there is divergence, and then that allows me to know that maybe that level is going to hold. Okay, but we're not going over divergence right now. The RSI is not as good as the ultimate oscillator for divergence, but it's very good for um, overall other things that I use it for, and I'm going to show you how I use it. Alright, so let's get right to it. But first of all, let's talk about a few other things. For new traders, I think that you need to learn to find yourself a system and stick with that system. What a lot of traders do is treat their trading system like it's a bad marriage, where a lot of times when you marry someone or you get with a person, you're so head over heels at first and you don't see the bad qualities, and there's going to be bad qualities with everyone and with everything. Okay, so you have to learn how to deal with those and take the good with the bad, and that's going to be the same thing with your trading system. All right, so a lot of people like to jump from system to system just as they would like from a marriage to a marriage. You have to find a way to make it work. All right, you have to find out why it's not working. Okay, so once you do those things, then you can find out if your marriage could work or if your system could work. Same thing. All right, so you don't want to jump from system to system. You want to find something, stick with it, and make it yours, master it. Okay, and that's what I've done with this Ichimoku. I've stuck with it for many years. At first I jumped into the Ichimoku and I couldn't even understand it. It looked too complicated to even mess with it. But one day I said, I'm going to try this thing and I'm going to stick with it. And I stuck with it for 1 week. It took me a week to figure out all these parts and everything, and to learn them. But once I did that, then I started to really pick it up, and I stuck with it because I saw promise with it. So if you find a system and you find promise with it, stick with it and see if you can make that thing work, if you can master that. All right. And then also, I think that I don't believe in demo trading. I believe in having a live money account. So maybe you have an account where you're trading maybe $100 in that account. Okay, because paper trading, your mentality is not going to be the same as it would with any amount of money. Okay, paper trading, no, it's no big deal. You lost it. You can risk even more than you would, paper trading. So you want to have a trade an account with some money in it. It could be a $50 account or a $100 account or whatever, but that changes your mentality just a little bit. It'll change it to where you're losing real money. Okay, so I don't believe in that paper trading. So the first thing you should do is find you a system and get an open up account. If you're going to paper trade, just do that at first to learn your system, to learn your your indicators, and learn support and resistance. But once you learn everything and you feel good about starting to trade, and you want to know if you can open up a live account and start putting a lot of money in that account, first put that $100 in that account, and if you can make that $100 grow, then you probably can make more money grow. All right, so that's my philosophy, and that's pretty much how I did it. I did have a demo for a little while, and then I put a little money in and started trading that way. And then I put a lot of money in and lost that money. And yeah, I've had a lot of losses, but now I'm to the point where I don't have I'm making money. I'm not losing money. And it took me a couple years to start making money, but now I've been making money consistently, and I'm gonna tell you some of the reasons that I believe why. And a few of them are just the reasons that I said. Also, my money management became more disciplined, and I became a more disciplined trader. I followed my rules. I wasn't quick to jump in. Prior to that, I would always want to jump in early, try to catch it as soon as possible. Okay, catch it at the bottom, catch it at the top. We all know, as experienced traders, we know that that's really hard to do, and that's where people start losing a lot of their money. I might try to catch this at the top here and say, oh, this is going to break. I'm going to open a trade, or I'm going to catch this right at the top. I'm going to catch it short. So you put an entry order in for a long trade or a short trade, but it goes the other way. You were too early and the trade goes the other way. Okay, so you want to get confirmation. So yeah, first we got this confirmation that it bounced on this support level, I mean resistance level. Then you got this long candle, and then this candle closed, and then I get it closed below that. Now I'm going into the trade because it's starting to show me that the momentum is starting to fall off, and then I would enter the trade. Now usually I would have tried to enter it early. Now here it would have worked, okay, but you know, how many times doesn't it work? You know, a lot of times on Kumo breakouts, that's where you can get tore up, because a lot of times a breakout doesn't occur the first time. It'll seem like it's going to break out, and I can show you a lot of times here, like even here, right here, if you were looking for a breakout here, look how far down this candle went, but then it pulled back up and never broke out. You would have been looking for the downside breakout, because you know you're below the cloud, your price is below the cloud, and you didn't wait for it to close, but you're saying it's below the cloud, you're below the Kijun-sen. So yeah, it's showing you that maybe you have some downside momentum. But look at what happened here. You know, this candle came all the way down here, and it would have looked good. You've been like, oh yeah, this is going to work out. But sure enough, it pulled all the way back, and then it took off the other way, stopped you all out, and you lost money. And you do that too many times, and that'll happen to you. So wait for the candle to close. See, this told you a lot here. It pulled all the way down here, then it never closed outside of the Kijun-sen. All right, I mean outside of the Kumo. So that's one thing. Another thing is you have to have your strategy, and you have to have documentation. You want to always document what you're doing. You know, have a reason why you're getting into the trade, and have things that you look at. What I do, I have this Microsoft Excel spreadsheet here. I made an active trading ideas log. All right, so what I do is I look at the charts every day, and I find a trade that is on the horizon. I look at it and analyze all the reasons why I can get into this trade and what the reasons would be. So I put the date that, you know, I looked at the trade. I put the pair, and I put the status. This green would mean it's an active trading idea, and red would mean that it's not an active trading idea. It's past. It's not good anymore. And my reason for looking for the trade or getting into it would be the Kumo. This would be a Kumo break. This one is a Kumo break. And what I did, I made a data validation and put in all of the trading styles that I use. So if I'm looking for a Kumo break, Kijun break, fractal break, or bounce, support and resistance, pullback, other, I put that in there, and then that's what I do when I'm making my reason for getting for the trade. And then I put down if I entered the trade. No, I didn't enter this trade. Now on here you can see the New Zealand dollar yen, and it's a Kijun bounce, and yes, I entered this trade. Now if these opportunities pass and they're no longer valid, then I'll turn the status to red and close out that and continue on. And each day I'll do that, just fill this up and then fill it up on another sheet, and do that all the time, have everything logged. So what that helps me do is when I go back to my charts, I could just quickly look at this spreadsheet and know the pairs that I'm looking at, because when you're looking at a lot of pairs, it's hard to remember which ones you want to trade. So you have to have some documentation. You have to have a plan. You have to treat your trading just like a business, because basically that's what it is. It's going to make money for you, so it's a business. You have to treat it like a business. Most businesses have logs, you know, they log things down. You know, you have to have an account, be accountable for everything that you're doing. So you want to be accountable for the reason why you're getting into the trade, and you want to be accountable for the trade itself. And the way I'm accountable for the trade itself is my trading log. So when I get into the trade, I'll log that also. So this is just showing me trading ideas, and I know what I look at, and then I have my trading spread log sheet. All right, and I updated that and made that even better. Okay, so let's get into the charts right now. All right, so this pair I'm looking at, New Zealand dollar yen, and you can see 47 pip profit. It looks like it's moving out. Now on my chart here, you see the RSI. Now I showed you the past video how to use the Ultimate Oscillator, and I was using that for divergence. Now I believe the Ultimate Oscillator is the best indicator for divergence, but also the RSI is very good for divergence also. But the RSI is better at other things besides divergence. You know, the Ultimate Oscillator, I like to look at this 50 level a lot, and what happens is price the indicator will bounce off of that 50 level. That's going to be the pullback. So when I'm in an uptrend, I look for it to pull back close to that 50 level, and then boom, you could get into the trade. But I'll show you how I did that. What I saw here was price bounced off of this and bounced off of this area up here, which was my previous month's high. Price bounced off of that level, pulled down, and then I saw this pullback. I said price is pulling back. I'm going to look for the 50 level for price to pull back to. So you don't even need to look at the 50 level, because what happened is price pulls. If price pulls back to that 50 level, it's going to pull back to this Kijinsen here. So we pulled back to the Kijinsen. Now I could have put an entry order right at the bottom of the Kijinsen, right? Okay, but here's what happens. If I don't wait for confirmation, and here's what could happen to me. I put the order in here and price continues to drop down even lower. That's where you start losing a lot of your accounts. So you need to wait. Yeah, you're thinking you're getting in early and you're saying, oh, I'm going to get in early, but it's not really better. If you ask me, I think it's better to get some confirmation to let you know to get into the trade. So I waited. This candle closed and then I got into the trade, entered on this candle, and then price is moving. Now how I entered, like I told you, price pulled back to the 50 level. When it pulled to the 50 level, it hooks right here. So it bounced and hooked. When I see that bounce and hook, and you can see it good when you have it a little tighter. All right, you can see that nice hook right there. And this is where I got into the trade after I was sure I had a green candle showing me that this level was not going to be violated. Then the next candle that opened I got into, and here would have been the hook right here. So that's the candle right here I got into, and then you can see where the price hooked. Okay, so that's what you're looking for, bounce off of the 50 level. Now this indicator is levels go from 0 to 100, which would be 100 would be all the way overbought and 0 would be all the way oversold. So 70 level is the start of overbought and the 30 level is the start of oversold. Okay, so let's see here. We bounced off of that 50 level, and when price is trending upwards, this oscillator is going to most of the time stay above the 50 level. It's never going to really go too far below the 50 level. You get a good pullback, it may go. Now see, this was a nice pullback, so it pulled back to the 50 level, but it stayed above. It never closed below there. It stayed above. It's staying above that 50 level. When you're in a nice downtrend, it'll stay below the 50 level. Now see, it's between the 50 level and the oversold level, which is going to be the 30 level. So you're in this level here, and it's between that level, and you can see what it's doing. It's ranging. All right, so you can use this in a couple different ways. So the 50 level was acting as support here. So anywhere I find a support level, I can do the same thing on this RSI. I can draw a support line here, or I can draw it on the bottom here, and this is the way I would do it. Well, I have to show you on one that you can really see it. But if this level, this 50 level was support here, you would wait for price to break that level and then get into the trade. And here's where the indicator broke that level right here. But we're inside the cloud here, so we wouldn't do that. Plus we need to be above the Kijinsen. So for my rules anyway, for me to enter a trade, I want the RSI to be above the 50 level. I want the price to be above the Kijinsen and above the cloud. If I have those situations, I can get into a trade. And now if I'm below the Kijinsen and below the cloud and RSI is below the 50 level, then I can get into a trade. If I don't have those three things, then I'm going to wait for all three of those to line up. Okay, so here they lined up, and so you could enter the trade here, all right, because you were above the 50 level with the RSI, you were above the cloud, and you're above the Kijinsen, so you can enter that long. All right, but I entered that on the bounce like I told you, so I got the bounce here, and you can see we bounced off the 50 level and then price took off moving upwards. Now I need to get above this level here. This is your previous week's high and your previous month's high. Those are going to be resistance levels for me, and the first time we bounced on that level, and that level holds, so we didn't violate that level. And here you could see price came up to that level. Here we are again, so you had that pretty much like a double top almost, and now we're attacking that level again. We need to get above this previous week's high. I'd like to get above that and then move my stop loss up there, and then we can concentrate on attacking this level and breaking that level, violating that, and taking off. All right, so that's the New Zealand dollar yen. We'll look at this EURCAD. I'm going to just go through these. Okay, so EURCAD, this is the same thing here. we're in the cloud here, and then finally price came outside of the cloud. We're above the 50 level, we're above the cloud, and we're above the Kijun Sen. We could get into a long trade. You would have got in here at the least. All right, if you weren't feeling safe about entering here, just because it was slightly above the Kijun Sen. All right, and my stop loss, see these fractal levels making the support level? I want to be below that level just about. Okay, so that's where I would have been, just below that level here. I didn't get into this trade because I'm into another trade, and this trade was taking a little while. But now you can see where it broke out, and now it broke out, and you want to get above this level here. This is your daily Kijun Sen here, this blue line here. So we need to get above that daily Kijun Sen. And if we can close above that daily Kijun Sen, then we could ride this maybe a lot higher, or certain levels we'll look at. We'll get above this flat top here, this Kumo shadow, and then get above this, hopefully move up and get to this level up here, back up to this previous month's high. All right, but that's all long-term trade, and I trade long-term, so I'm looking for a longer trend trade. You know, a lot of day traders, I don't day trade, so I wouldn't really be able to talk to you about day trading and stuff like that. So I'm showing you longer idea trading. So we need price to break above this level. If this level is not violated, then we'll probably look for more downside, look for price to break through the cloud again, and then attack this previous month's low. Because now we hit this level here, hit it hard too, and then now we're moving up, and maybe it's just a pullback before we start to attack that level again. Now the thing is here, the RSI, like I said, is used for divergence, and you have it twice on this chart right here. Here we have price going up, 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 and the indicators going up. Now here we're at the top. This is pretty close, and then price is coming down. I mean, the indicators coming down. Price is still right here up there. So that's slight divergence here, but here you have a bigger divergence. Here's where the bottom of the RSI is, but here's where this is not the bottom of the market. And then you have this here. This is the bottom of the market. So this bottom here on the RSI is moving upwards. It's higher. You could see it trending upwards. So this would have gave you a good indication that this level is going to hold. Now you're not going to be trading your Ichimoku system if you want to play the support and resistance bounce, but then you can wait and play the break your cloud, and that's where you would be right now. All right, and now price, you can see the indicator all that time was below that 50 level, and I'm not playing these oversold and overbought levels, and I'm just looking for a price to get above that 50 level to show me more upside momentum. I'm just looking for the momentum. I want to try to get in the trade with the momentum. And see right here, the indicator made this real high over above the 70 level here, and then when we were also at this top peak here. Now there's other trading styles, and if you weren't trading with Ichimoku, you can see that we hit that level very high over the 70 level. So this was almost up to the 87. That's pretty high on the RSI, and you see the so this resistance level here. So this might have told you this would have been a good trading opportunity to get into. And then also you're playing this bounce here. Now the RSI was below this level here, but the thing that we saw was the divergence. So we wouldn't have played the oversold level. We would have played the divergence, looking at this divergence, knowing that maybe this level is going to hold. And we're saying that this level may hold just based off of that divergence, right? Because the momentum of the indicator is showing that the price may change. The momentum changes before price changes, okay? So momentum changes before price. So that's where we are with this. This right now is the Kumo Breakout, basically. You know, here's another thing. Someone enters the trade here before the candles closes, and then what happens? It pulls all the way back here. Depending on where your stop loss was, you would have been stopped out. If not, you would have still had to wait all this time before finally now you're breaking even or just a little bit profitable. All right, so it's best to just wait for that candle to close. See, this one closed slightly below. You could have taken that, okay? So I'm just waiting on these candles to get confirmation and looking at the momentum of the market, trying to use the RSI for momentum, not for oversold and overbought. All right, so US dollar CAD. Looking at the US dollar CAD. Now here's what I was looking at on this pair. Since price came down below the cloud, missed this breakout here because this was Friday. Didn't want to take this, and then that market opened and I didn't want to be that far away. I wanted to get it closer. So I said I'd wait for the pullback. The pullback was to this level. So we could have looked at maybe this level was going to hold, or the cloud would hold, or now the Kijinsen. So we're at our top support. We're at our top resistance level almost, because we're at the top of the cloud basically right here, and the Kijinsen. These are going to be our last levels of resistance with the Ichimoku system. Now what we would want to see is just see this hook up, make this, and then hook back down. Then you can take this on a short trade. All right, but now if price violates this cloud, then all bets are off for the short side, and we want to wait for price to break this previous week's high, this previous month's high. All right, so that's what we're looking at on the US dollar CAD right now. This is looking like maybe this will hold. So what we would definitely wait for, we want to get confirmation. So our confirmation will be the RSI holds, I mean not the RSI, sorry about that, this Kijinsen holds, and then price bounces off of the Kijinsen and closes outside of the cloud. You get another close below the cloud, then you take that trade, and maybe you write it here, because here's your daily Kijinsen level right here. All right, and looking at the market, at the RSI here, you see there's no divergence here, so that doesn't give us much of a clue. We say, so maybe if there's no divergence, maybe the momentum is still to the downside. We want to see where this closes though. If it closes above that 50 level, maybe the momentum is changing to the upside. Now there is divergence here, so the divergence was to the downside here. So another thing that you can do with this oscillator, and this is another way to trade this oscillator, you can draw your support and resistance levels and trend line levels on this. Okay, so now I have my trend line here, which is going to be a support level because the market boom, boom, and now we're at this level. If we break and close above this level, then maybe we're looking for the long side. All right, and that would be right in line with the Kumo breakout to the upside. But there's not much room here, because you have this top right here, which is going to be resistance, and this previous high resistance, all this resistance. So maybe I wouldn't even mess with this trade. I would wait for, if I'm going to take this, I'd wait for it to break above this level, or break below the cloud again. All right, so that's how you can use that RSI also. So if it bounces here, then we know that maybe we're going to stay low. This is going to be a short trade. Okay, US dollar, Swiss franc, and we have a Kumo breakout. Let's go to the daily time frame on this. You can see, first of all, this trend line that we have drawn here. So let's take this to the daily. And I need a new computer, and eventually I will get one. That's on my things to do list. And then I have one that's a little faster, and you don't keep seeing my Norton sign pop up. It's a surprise it hasn't popped up yet today. But anyway, we're looking at this on a daily time frame, and you can see the trend is down. You can see the trend line we have drawn here, and you can see the market making lower highs and lower lows. All right, so now we see this high here though, and then we see a high that was higher, but you also had that right here, but if you want to count that as the high. So this was just a slight pullback, but maybe this is a high, then the market dropped, and then now this high is higher, which would tell me that, well, maybe this is gonna break to the upside. So what we want to see first, we're going to follow the rules of the market. The market is trending downwards, so we're going to look for a short trade. The only way we'll look for a longer trade is if price breaks outside of this cloud on the daily time frame. And we'll go to the 4-hour time frame again. So if we're looking for a short trade, the Kumo breakout would have been great, right? So you have your Kumo breakout, and you broke out here, so you could have entered here, and you put your stop loss a little above the Kijinsen here. It's not too far of a distance on this. Now the thing is, you have this support here with the daily Kijinsen, We'd like to get below that level, but still I would take this trade and ride this as far as possible. All right, so we look for our levels that we're gonna find for maybe where we get out the trade, and here would be one, maybe another level, then back down to this level again. All right, this will be the first level we need to break if we got into a short trade, and this short trade is still valid because really we're setting up a level here, and we need to really get below this level here, and you could still put your stop loss up here, but it looks like this is starting to develop its own support level here. Now what could happen is it keeps making a support level here and then finally goes up, never comes down any lower. So yeah, I'd like to see this close a little lower, make sure we break this level where it's starting to set up a support level. All right, and you could see that support level is based off all the way over here. You could put a line here and you can see where that level held over here. All right, so you see that you want to get below that, because look at this right here. This is where all of that action is, or where all of it is, and you need to get below that. And then once you get below that, you're so close to the Kijinsen. You know, this trade is one I may wait for. If I waited, I'd wait for it to get below this Kijinsen, but still you could get into it here. All right, so that's US dollar, Swiss franc, Aussie yen. Now the thing again, you see the Aussie yen, we're above the Kumo, so we're bullish. And then you had this pullback all the way back to the little bit, missing the Kijinsen a little bit, but you could see the pullback of the RSI. How I told you, it pulls back to the 50 level and then breaks. So we pulled back to the 50 level. We got our confirmation candle right here. You get into the trade right here, and now you're very good in a very good trade because you broke this daily Kijinsen. That's a strong support and resistance level. So now you can move your stop loss up. Well, you might as well just keep it where it is, right? If you entered the trade here, well, your stop loss would be way down here, but now we broke this level, so yeah, we can move our stop loss up a little bit. Probably move it up to this candle. Don't want to be as close to this support and resistance level yet till we get farther away, then we can move it up to that level. But right now you broke that level, you broke this strong level here, you broke this shadow right here, and now you can look for price to move up somewhere into this area. All right, so that's long-term trading. So this is the level we'd be looking at breaking up, getting up to maybe to around the 95.66 level. All right, so this is a very good trade. Maybe price pulls back again, hits off of this level, you could get into the trade. I wouldn't get into it now. I don't like to be that far away from support and resistance levels. I would have got into it here or on the break of this level here on this candle, and then I can put my stop loss right below that level. All right, so like I said, you could see the RSI staying above that 50 level. It bounced on that 50 level, went a little bit below it, and then went up higher, and you can see where price came pretty close to the Kijinsen. So that would have been told you a pretty good pullback here, because you could see all your support here. You have your Kijinsen, you have your cloud, your flat top. This would have been a very good trade. Then you have confirmation. Now you don't want to enter on the close. You don't want to have an entry order here, because what if price continues down lower, down to this level? Okay, so we wanted to get some confirmation that this level was strong, and what we did when this candle, this very strong candle, broke above that level and even closed higher than the previous candle. So here we are, we closed above that level. This is definitely a good trade to get into. It would have been a good trade to get into. All right, Aussie yen 4-hour time frame. Here's the pound yen 4-hour time frame, and again, same thing. You could see where we would have gotten to a trade down here where price bounced off of this 50 level. We got some confirmation, and then we get into the trade and price moved up to here. Now this is going to be the level we need to get by. This is going to be your previous week's high. You need to break that level. You're at the 166.63 level. We need to break that level, and being that it was so close, if you did get in on this candle here, then you would have made some profit, and you'd have been looking to break this level here. Now you can see that the Kijinsen, the bottom of the cloud flattening out here, so some momentum is dying, but still the RSI is above 50, and this is holding as a support level. And basically you just really so close to this resistance level. You need to wait to see if it breaks above that level. Now again, you could get into the trade here too. Once you break this resistance level here, you're going to break this fractal level, close above that fractal level, then this level could be your support and resistance level where you move your stop loss to and enter the trade on this break. All right, but that's looking to break that level first. If you enter trade now, then you're just holding on to see if you break that level. If that level doesn't break, you may want to take your profit because this level may hold for a while, and then you could re-enter the trade on the break of that level. Pound dollar. Pound dollar is all over the place, but right now we're above the cloud. We bounced off of this daily Kijinsen level here, and you can see we didn't come all the way down, and we didn't come all the way down here either. Alright, so but here you could see we had a bounce off of this Kijinsen level, and then we closed above the cloud. You get into the trade here. Price pulled back to this Kijinsen, this daily Kijinsen, which is holding that support, and then moved up to this previous week's high, and then came back down. We're looking like we're in a slight range here, and what I'd like to see now, what I'd wait for on the pound dollar is for us to break this level, close above this fractal level here, which would be basically closing above the 161.48 level, close above that, and then enter a trade. Put your stop loss. Technically, you want to put your stop loss at least below this support and resistance level, which would be this previous week's high, or else put it below this fractal level here. All right, and then you will look to take this to this level up here, closer to this level, this previous month's high. All right, that's pound dollar. Total breakdown will be closing below this Kijinsen and then back below the cloud. Alright, New Zealand dollar, US dollar. Same thing, looks like the pound dollar almost. Price broke the cloud here. This would have been a nice trade to get into. Also, you see the bounce. You got the bounce on the 50 level, and you got the bounce on the Kijinsen. And then here we go. Price closed above the cloud. You enter here. Alright, we missed this trade. We didn't get into this trade, but this was a good area to get into a trade right here. Alright, because you're above the 50 level, you're above the Kijinsen, and you're above the cloud. Alright, so this Kijinsen tells you to change the trend possibly, and we're to the upside because we're above the cloud, above the Kijinsen, and we're above the cloud now. So price pulled back, and here's that 50 bounce almost again. So we broke up here, price pulled back. You needed some confirmation. Maybe you wait for this level. This wasn't sure confirmation, but if you entered on that candle, you put your stop loss right below that Kijinsen, and you would have been in a trade waiting to break this level. Now this is still a good trade to get into, because if we can break above this level and close above this level here, which is going to be right here, all this lines up together is your daily Kijinsen and your previous week's high. So that's a strong resistance level. If we can break that, it'll be a strong support level. Put your stop loss a little below these candles here, below this fractal level. This will be your support and resistance area. So price will be above that, and then you can ride this trade out. Okay, so that's New Zealand dollar, US dollar, and Aussie dollar. Last pair we're going to look at. Australian dollar, US dollar. You have a breakout, Kumo breakout. This is a good area to get into the trade right here. You could have gotten into the trade right here, and then price made a bearish candle, and then finally we're here. This candle closed, you could get into the trade. I mean, because this is still in the same area, your Kumo breakout. You could take this trade. Stop loss below the Kijinsen here. Your RSI is above the 50 level, which would violate your trade. Would be price coming back, closing below this cloud, closing below your Kijinsen, closing inside the cloud. You may get to the point where you want to get out of the trade. So right now this is an enterable trade. You can get into this along. Now you're looking at the daily Kijinsen right here. So maybe price pulls up to this level. Then you hold on to your trade, see if you can break that level. If price can break that level, then you're looking longer, even longer term, up to this level here. Again, up to the 97.52 level, which is going to be your previous week's high, your previous month's high. Alright, so also look at this level. Once you break the Kijinsen, all this level right here, the Kijinsen and this previous top right here, you're going to look at this shadow. You could see that all lines up. So that'll be about 95.35. Just need to break this daily Kijinsen and close above that. I would enter this trade right now, and I would put my stop loss a little below this Kijinsen here. Alright, and I would look to get above this level, and if I can get above that level, move my stop loss up, ride this up to the next level. All right, so that's looking at the Aussie dollar, that's looking at all the pairs, and that's everything for now. So hopefully that helped you guys. Hopefully you see a couple things. You're learning something every time. I'm going to talk more about the RSI next time I make a video. We're going to get a little deeper how I trade with that. If I'm going to have one indicator on my chart, it's going to be the RSI, because I'm going to be able to use it for momentum and for the divergence. All right, divergence is really also momentum, basically, because it shows you that the momentum of the market is slowing or increasing or whatever. Okay, but I'm not looking at the oversold, overbought levels too much. I don't enter a trade based off of those. I enter a trade based off of this 50 level. I need to have confirmation that this is going to be a strong level for me, and it needs to bounce off of an area for me. I need to have a bounce off of something or a break of something. I need to break a support and resistance level, or bounce off a support and resistance level, and that's the only way I'll enter a trade, because I'm staying close to support and resistance, keeping my levels close, and that's where my stop loss is always going to be close. All right, traders, hopefully that helped you guys, and until next time, may God bless you. So long.